name you all know, or at least, well, the game you guys all know for sure. And he's going to tell us how to get strategic investors to eat from your hands. It's a very ambitious title, and I think that's a very, if you can really make it come true, that's a very interesting thing to hear about. So please help me welcome Sean Lee, the Chief Strategy Officer of Wargaming.
Hi, everybody. It's an ambitious title, trying to get people into the room. We'll see. It's really about the frustrations and the sadness I felt as I talked to many developers out there who are trying to get funding and all the things that you do wrong. And so I just wanted to share with you some of the things I've kind of gathered over the years. Just before getting started, I am the Chief Strategy Officer at Wargaming. I oversee strategy as well as corporate development, so all investments and acquisitions, M&A activities also go through me. Prior to Wargaming, I was Director of Business Development at Tencent in Shenzhen, and I was also doing corporate development at Shenzhen as well, so I think I have a little bit to share with you guys. Wargaming. What I've noticed is we're quite well known if you know PC games. Also, if you know console games, you tend to know us. Generally, whenever I go to mobile-related conferences, we're still kind of a new player in that space. So if you don't know, we're a global game developer and publisher. Globally, we have about 150 million registered users. We focus on free-to-play online games. And as I've mentioned, we're on PC, console, iOS, Android. If you count Windows 10 as a platform, we recently launched there as well. Yeah, it's really about how to get money from strategic investors. So what's the difference? Financial investor versus strategic. I don't know if you know the distinction. I'm here to tell you there is a very clear difference between the two. And when you're pitching for an investment, it's very important for you to understand what they're looking for. So financial investor, we're talking venture capital, private equity, angel investors, hedge funds. These are people who put in usually cash to get an equity stake in your company. It could be different forms, but that's essentially what they do. What they're hoping for is they put in 10, they're expecting to get something that's bigger than 10 back. It's pretty simple. How you get it back, there are different ways, obviously. You can sell the company, you can go public, you can make a lot of money, and you can pay back cash to your investors. There are different ways, but essentially, they put in 10, they want more than 10 back. A strategic investor is different. It's companies like us, like Wargaming, it's like EA, it's like Nexon, Tencent, NetEase. At least in our industry, these are the people who are strategic investors. It's basically your friends or your competitors or your peers in the same industry who have some capital that they want to deploy for certain benefits. And the difference between financial investor is the strategic guys, because they're in your industry, they will give you more than money. They'll give you money in some form, but hopefully they're also bringing to their table their audience, their operating expertise, their game design expertise, monetization expertise, relationships, infrastructure. There's a whole host of things that they can bring to you in addition to money, which makes them very interesting. What they're hoping for, why do they do this? Why do they invest in your team? It's, of course, they want the best for your team. They want your team to grow and be more valuable. So yes, if they put in 10, sure, it would be nice if 10 becomes greater than 10. But that's not the main reason. Strategic investors have their own business. Tencent has its own multi-billion-dollar business. What they want is something from you that they can take back to their core business so that their core business can make money. They can put in 10 for you, but if you can help that core business get 500 more, that's a great deal, right? So synergies with the core business, that's really what strategic investors are looking for. Now, to be clear, some strategic investors just invest for financial gains. I'm not counting them as strategic investors in this case. So just kind of recap a little bit and be very clear. Strategics are operational in their nature. Financial is opposite of that. Financials want money back, more money than they put in. Strategic wants to grow their core business. Frankly, both can be flexible in how they approach the actual investments. But because strategics have a bigger goal in mind, they can be more flexible depending on the company. They can give you loan, they can give you infrastructure in exchange for equity. There's a lot of different ways they can approach this issue. The strategic investors like Wargaming, the money we put in your company comes from our business. We do the same business that you do, and then with that money, we're investing in you. Financial investors like VCs, it's their money, but the money is ultimately somebody else's money that they're managing on behalf. So it's a little bit different in terms of where their money comes from. Strategics can have a very long horizon because you don't have an immediate need to try to milk your investment in any way. You're trying to build a business together. Financial investors, they want to help you build your business, but at some point they need their money back because, like I said, it's not their money. So, how do you decide whether you're going to go talk to a financial investor or strategic investor or both? You should probably do both. What's your goal, right? Do you just want a lot of money? If you just want a lot of money, tell me so I don't talk to you. If you just want a lot of money, maybe speaking to strategic investors could be interesting because, like I said, they have a bigger business that they want to benefit by investing in you. So they are able to pay more than a straightforward financial investor who is dependent on the valuations that the market sets. If you're looking for growth, like I said, strategic investors are in the same industry as you are. There are many things theoretically that they can really help you with. Whether it's audience or knowledge or expertise or infrastructure, there's a lot that they can help you with. To be fair, financial investors, the good ones, can help you along those lines as well, especially if those financial investors were previously from the same industry. Both financial and strategic investors can help you scale. That's pretty obvious because that's what you're trying to do by raising money. So, do your homework. When you go talk to an investor, you got to understand what they do and what they're looking for and who they are. So who are you pitching? I'm talking not only the company, but the person. Are you pitching to Tencent? Are you pitching to Wargaming? Is it EA? You have to understand their core businesses and the areas that they are focusing on. Because if what you are doing does not fit with what they are doing today, or more importantly, where they are trying to go to, then you're wasting your time and you're wasting their time. Also, know the person specifically. Are you talking to their operations guy? Are you talking to their marketing guy? Are you talking to a corporate development specialist who specializes in this? Are you talking to the owner? Depending on who you talk to, the angle of your conversation has to be different. This is obvious, but many people don't understand this when they pitch. They just have the same template, same set of decks and slides, and they just regurgitate the same thing, not caring about who your audience is. So it's really important to know that. Depending on your needs, you need to understand how their process works. Is it going to take 6 months? Some companies can take up to a year. If you're looking for immediate capital raise for the next 1 month so that you can fuel your company's growth in the second part of this year, you should probably rule them out, right? Is there a long investment process or is it a short investment process? Is the person you're going to be talking to making that decision and giving you the money the next week? Or do they have a committee? Do they have a boss? Do they have owners they need to go talk to and get that approval? The reason why you need to know this is because this helps tailor and shape your approach in this dialogue. Also, going back to understanding who you're talking to, one way to look at it is if you can get a visibility into what they have invested in previously, that's always very helpful. Because generally, companies will be investing in areas that they care about, that they think will impact their future business. And so if you fit that mold, or if you can tailor your pitch so that it's closer to what they're looking for, you're going to be more successful. How the investment's been structured is it's more technical. Is it a bond? Is it equity? Is it preferred debt and whatnot? It really depends on what you need and the way certain investors approach it. Some companies have certain styles that they prefer, so be mindful of that. And then once again, do you fit? Are you fitting with their strategy? So it's a little bit more detail in terms of understanding who you're talking to, but what's their strategy? You have to understand. Just ask them. Most people will tell you, maybe not in detail, but they'll give you a general understanding of, we're not going to make Java phone games anymore. We want to focus on iOS. We want to focus on Latin America. We want to focus on third-tier cities in China. They have a certain strategy that you want to understand, and if you ask, generally they will share it with you. Operationally, are you guys going to fit? If you're based in some small city in Vietnam, as an example, and their core operations in San Francisco, it may be challenging, or maybe not. If they have an office right next to your office, it might be easier. These are obvious things, but you need to check how they are operating and to understand how it may fit with what you guys are doing. Some companies are very big. I mean, Wargaming is not a small company. Tencent is not a small company. Some places you need to understand what different teams want and then understand your relationship with them and try to get support. I know this is a lot of work to get some dollars, but if you really need this money to grow your company, make the effort to understand who the key stakeholders are and spend time with them. For example, if your particular game can obviously help this strategic investor make money, but if it can also help their esports needs, go talk to the esports guys as well. It's a smart thing to do. And it's one thing to just say, oh, we can make you a lot of money. That doesn't help. Be more specific. If you have traffic, let's say you have 20 million monthly active users within your game or in your portfolio of games that are not making money. Okay, maybe for you or maybe for some people it's not very interesting. But maybe for some people who have another mechanism upon which they can monetize your audience, for them, your 20 million monthly active users becomes a very interesting group of people. So identify the value you bring to this particular investor and lay it out for him or her in a very clear way. And have an execution plan ready. Be ready to go. They could be next week. Let's go. Where do we sign? Have a plan ready to roll it out. Paperwork, documentation, the actual operational plan, how you're going to integrate with them or not. Have those plans ready. And this is more difficult, but if you can figure out what the business is, how your business is going to grow with this money, but in addition to that, if you can make an attempt at how you're going to impact your strategic investors, bottom line, make an attempt to do that as well. So just understand what your options are. It might just be that you're not really looking for money. Let me give you an example from my Tencent days. Sometimes a developer didn't really need the money, but what they wanted was better attention of Tencent. because Tencent's working with so many different companies that naturally, if you have a business relationship and a strategic relationship, you're going to be paying more attention to them. So be clear what you're expecting. Are you just wanting the money? Or do you want the relationship? Do you need help outside of the money that you're getting? Go shop around. Obviously, as a strategic investor myself, this is not something I would normally tell you to do. But as friends, I would say go talk to as many people as possible. Here's interesting dynamics. There are certain rivalries in the industry. Tencent, NetEase as an example, EA, Activision, US companies tend to be rivals with each other. We're rivals with Mail.ru in some sense. So if you're able to kind of massage that into your message and say, let's say you're talking to, let's say you're talking to Shonda, and you say, oh, by the way, Tencent was very interested in our company. That may be the one thing you need to trigger a positive flow within that organization. Make sure you understand that this particular path down strategic investment may not happen. So you got to have plan B and C's ready as you have these dialogues. I'm not going to get into too much detail around this. I know I have much limited time than I thought I would have, so would just lightly go over these. I would just say make it short, please. Please make it short. Don't come with 50-page, 70-page, 80-page pitches with meaningless numbers and pictures on it. You're just going to lose attention. Put yourself in the perspective of the investor. They're sitting there looking at 4, 5, 6, 7 opportunities a day, maybe more. Count that out over weeks and months, and that's a lot of things. That's a lot of noise you're trying to get above. So just be short, be impactful. Don't read. It's annoying. It's boring. I can read. Don't bring a ton of people. Just bring the relevant people. Get to the point and practice and polish. Obvious things, but I think one highlight I would really say is just be short. You can still have a meaningful impact by having a short pitch. And talk about, once again, keep in mind that you're talking to a strategic investor. So think about how you're complementing their core business. Think about how you're helping them, despite the fact that usually it's going to be a big company that's going to be investing in you as a strategic investor. Think about what you're better at than they are. If you're, let's say, if you have a very strong position in Indonesia as an example, highlight that. Say you are not so excellent in Indonesia, but I can fill a massive gap for you there. So highlight those points. Be compelling, support with data. Do not ignore risks. What investors do not want to see is you only trying to paint a beautiful picture. A rosy picture alone makes me doubt whether you have a full grasp of the position you're in and the industry that you're in. If you're honest and straightforward about the risks that you have and the risks that you have and the competition that you have, then at least I can say, okay, you're thinking about it. Be clear, don't be a lecturer. You can actually read, but once again, keep it short. And here's a very important point. Start early, build a relationship. Don't wait until you're ready to go. If you have an idea that you're working on and you think you're going to be needing money 6 months from now or a year from now, start now. Just start talking to people. Become friends. Give them a hint. Give them an understanding of their path forward, of your path forward, so that they will be aware. So that next time they see you, and when you actually bring up the topic of an investment, they would know who you are, they would understand who you are, and it won't be like, oh, you just met me, just ask for money, right? So the key point really here is the relationships do matter. A lot of times it's the person that's going to give you the money, not the company. So think about that. So in sum, think again about why you want strategic money as opposed to financial money. Think about that. one thing that I did not highlight here that you should be aware of is if you get strategic investors' money, it may have an impact on your future path because other investors down the road may like or may not like the fact that you have a strategic investor. So it's something to keep in mind. Understand who you're talking to and their business and strategy. Make a compelling case on why you and them combined is better. 1 + 1 should be better than 2. And then, clarity and accuracy, but really be short, please. And relationships. Focus on the relationships. Go for meals. Go for drinks. That's how you get the money you need. But more important than that, in a strategic relationship, you're kind of with them. You're living with them to some degree. So you need to be sure that relationship's going to be positive and helpful as you go forward. So that kind of wraps it up. If you have any more questions, that's my email address. If you need money, that's my email address. If you have great ideas on games, platforms, whatnot, shoot over an email. We're very open. We're happy to talk. Let your friends know. We're global. We cover every market in the world. We have customers in every market in the world. So we'd love to hear from you. Thank you.
Thank you, Sean.